Hi guys, today I am going to review IOL Chemicals and Pharmaceuticals. IOL Chemicals and Pharmaceutical Limited started as a chemical company which is in organic chemicals or specialty chemicals. Started with acetic acid production, and later they diversified into generic API manufacturing. Let's see what are the business segments of IOL Chemicals and Pharmaceutical. First business segment is specialty chemicals, which is also organic chemicals. So their major flagship product is ethyl acetate from organic alcohol. Ethyl acetate is also called green chemical because it is manufactured from organic alcohol, and the pollution creates because of its manufacturing is very less. And it is widely used in packaging, pharma, and wide range of industries. They started off manufacturing acetic acid, and they still do it, and it is used in pharmaceutical, petroleum refineries, and food processing industry. They are the second largest producer of isobutyl benzene. They also manufacture acetic anhydride for pharma, agrochemicals, and perfumes. And other products include acetyl chloride, monochloroacetic acid. So right now the chemical segment contributes around 36% of revenue for IOL Chemicals and Pharmaceuticals. And next business segment is generic API manufacturing. In that their flagship product is ibuprofen, which is an NSAID, which means that non-steroidal anti-inflammatory drug, which is mainly used for pain, anti-inflammation, fever, and so on. And they are the largest manufacturer in the world with 30% of global share. And since they have diversified into other API manufacturing also, they have products like anti-diabetic drug metformin, anti-convulsant drug gabapentin, anti-hypertensive drug losartan potassium, etc. And right now the API manufacturing contributes around 64% of revenue for IOL Chemicals and Pharmaceutical. If you see, up to 2015, chemicals were contributing more revenue than APIs. Right now the balance has actually changed. Let's see the timeline of IOL Chemicals and Pharmaceuticals. In 1986, IOL founded with acetic acid plant. That itself, they also established ethyl acetate plant as well. And 1996, they started another new acetic acid plant. 1996 and 1999, they started ethyl acetate and the acetic anhydride plant. 2003, they ventured into pharma API business, making first ibuprofen unit. 2009, they established a new plant for isobutyl benzene, monochloroacetic acid, and acetyl chloride. The importance for this unit establishment is these chemicals also stand as a raw material for ibuprofen, which is their main APA. And in 2010 they are listed on NSE. 2018, 2019, 2020 they actually started diversifying into another several generic API like metformin, pendaparasol sodium, and other APIs. Let's see their regulatory timeline. 2011 they get European Union GMP certification. 2015 US FDA inspects their manufacturing facility. 2019 a review was conducted by US FDA, but there were no observation, which was positive for the company. And let's see the role of backward and forward integration for IOL chemicals. IOL chemicals uses backward and forward integration in order to achieve a competitive advantage over its competitors, which also produce a moat in the industry. So in terms of ibuprofen, they also manufactures monochloroacetic acid, acetyl chloride, isobutyl benzene, which are the raw materials for ibuprofen. So they achieve backward integration in that sense. They also have a captive cogeneration power unit with a capacity of 17 megawatt to meet their power requirements for the operation. So they also have low operation power expenses. Let's see some interesting facts about IOL chemicals and pharmaceuticals. Company has a manufacturing unit situated in Barnala district, Punjab, and they have an associate company, Vivakam Intermediates Private Limited, with a key managerial connections. The company makes commercial purchases from them. So, and company's R&D center is approved by Department of Scientific and Industrial Research. If you see, environmental compliances are key for any specialty chemical and generic API manufacturing, because API manufacturing and specialty chemicals also generates a lot of pollution and environmental issues. So they got ISO 14001 2004 certification, which means that they're very environmentally compliant. And right now the EBITDA margin stands at 31%, which is very high for pharmaceutical industry, where the EBITDA margin is normally between 20%, 20 to 25%. Only Divis Pharma and Torrent Pharma claims more EBITDA margins than IOL. IOL derives around 80% of revenue from two products: ibuprofen, 50% of their total sales, and ethyl acetate, 27% of their total sales, which is an advantage as well as disadvantage. So it's a key risk for IOL chemicals and pharmaceutical. If anything happens in these two products, like any regulatory risk or key demand reduction, it will affect IOL chemicals and pharmaceuticals. So the company is trying to diversify into more new APIs. Around 10 APIs are in pipeline. The research has been done, and the exports forms around 34% of total sales in FY 2020. Let's see the pharmaceutical and chemical industry as a whole. India accounts for 20% of global exports of generic drugs, and right now the industry has been improved from manufacturing small API molecules to the preferred destination for high value complex APIs. And so in terms of market, North America is the biggest pharma market with 45% of total global sales, but regulatory hurdles are key in North American market. And industry ranks third in terms of and it has advantage of availability of a large pool of technologies, world-class facilities, and low-cost operations. And in terms of chemical industry, Indian chemical industry is one of the oldest chemical industry, and it is also 6th largest producer of chemicals globally, with a total export of 15.7 billion in FY 2020 until January. It's a key exporter of specialty chemicals as well. Now let's see the shareholding pattern. There is no significant share pledge by the promoters, and the promoters' equity has been increased from 41.19% in March 2018 to 43.69% in December 2020, which is very positive. And in very important fact is FIAs in 2018 they did not hold any shareholding in IOL. Right now they hold around 7.7%, which is very positive. And domestic institutional investors or mutual funds, they also they actually reduce their shareholding, but that's might be because of appreciation, but still okay. Public shareholding has come down because there was a share appreciation, the share price appreciation, so there might be a lot of profit taking from the public. And another Varinder Gupta is the founder chairman, and he holds around 2% share in it. And another promoters include Maya Devi Polycode, NM Mercantile, and C Enterprises. These entities actually. Other than promoters, Vasudeva Commercials Limited holds around 18.44% right now. Previously it was 19.14%. So let me go into financial evaluation of IL Chemicals and Pharmaceuticals. It has a market capitalization of 3,243 crores, so it can be classified as a small cap. Previously market capitalization of IL Chemicals were very low when it was standing at 204 rupees. Right now it has appreciated. The current price is not 552, it is 634 currently. So the share price has been appreciated a lot, and the book value stands at 186. So it is 3 times the book value of book value. So if you consider book price to book value, it's overvalued. Look at the stock PE, 7.06. When you compare with the industry PE, the stock PE is very less, and it's a highly performing business as well. So regarding stock PE, it's undervalued, so you can look at that factor. And they have a decent dividend yield. If you see ROCE, I have the videos in all the videos I have done, I have never seen a ROCE of this number. It's quite high, and I'm quite positive about this number. So ROCE is a key important ratio for any company. So if it stands at 68.9, it means that the company is highly efficient. And ROE also very high. Face value is at 10, which means that in future, if the price appreciate, you can expect that a lot of stock splits happen, which is also quite positive for the investors who want to invest into it. And recently they had a sales of 1,948 crores in last year with an operating margin of 31.7, which is high, very high right now. And profit after tax of 460 crores, which is also quite high. So these are positive points, guys. And last sales quarter they had a sales of 503 with a PAT of 115 with a sales, and within 3 years they have a sales growth of 38.7%, which is very high, guys. And profit percentage for 3 years, 323%, which is also very high. So keep it in mind, these facts. The company is doing very well. Yeah, they had given an EPS of 78.8 rupees. And price to book value I have previously also discussed. When you look at the price to book value, the stock is expensive, but given the competitiveness of the company, you can still it is acceptable. So let's focus on financial return, how the company performs in terms of financial returns. So the total revenue, if you see the total revenue, it has been going steadily from 2009. 2009 they had a revenue of 301 crores, and right now it stands at 1948, which means that around 6 times, guys, which is absolutely unbelievable growth as a company. So in 2015 2016 they had a negative profits. They had very meager profits in the beginning, see 13 crore, 10 crore and so on. From 2018 onwards, when they started more into EP manufacturing, see the profit growth: 460 crores, 361 crores, 237 crores, and so currently there was a ban in a drug which is a painkiller, so that factor also contributing for their increase in revenue. Ibuprofen is more accepted, and there is a huge demand for it. That is also driving their sales high. But when you don't consider these facts, also company is doing a remarkable performance. Let's see the component. Sales growth: 10 years 18% sales growth, 5 years 13.8%, 3 years 39%. TTM is 4%, which is understandable. Company has been growing a lot, so any further increase will be slow. And look at the component profit growth for the 3 years: 323%, which is very high, guys. And let's see the EBITDA margins, which is very positive for the company. See, in 2010 it has 10% of EBITDA. 2013 they had the 19%. 2015 2016 they have the EBITDA margins has been down. Mostly we don't know what are the factors, but over the years the EBITDA margins has been going up and up, so it's quite positive. And you also understand that in pharmaceutical industry, very few companies actually has EBITDA margin more than 25%, and IOL Chemicals and Pharmaceutical is among one of them. See the operating margin: 11%, 11%, 18%, and from 2019 it's going up and up. So over years it has been steady. And you also see the interest cost. It has been going up and up. Yeah, see why the profit has been down in 2014 and 2015. The interest cost has been high, and I think they were overpaying the interest. That's why. And when you reach at here, trailing 12 months, the interest cost is only 7. That means that they already paid the loan. They already paid the term loan. I will discuss in later session. So company made a mark in there. And other income has been going up, mostly because they have a cash reserves with them, so the interest income might be coming up. And see the net profits improving over the years. And dividends also in from 2020 only they started paying dividends because they have an ideal business at that time. In recent quarters, see the profits, operating profits has been going up from 30 crores in March 2018 quarter to 157. The factor of high demand of ibuprofen actually helped them to achieve this kind of operating profit. Let's see ROE and ROA. So guys, see the ROC standing at 62 percentage. Frankly, I have never seen a company analyzing or having a ROC of this number and ROE at the same time, because still they have debt. So with respect to ROC, which is one of the key among these three financial ratios, so the company is doing very well. See, in 2015-2016, ROE and ROC has been going negative, but from there remarkably improved over here. And ROA, it has been steady, and in 2019-2020 it's increasing to 30%, which is quite high for any industry. Let's focus on risk factors. Currently they have a debt of 350 crores in total, 140 long-term loan and 210 short-term. But if you consider the surplus company is virtually debt-free. It has a reserve of 550 crores with them, and their care rating has been improved substantially. Like they have a stable rating for long-term loan and care A1 for short-term. These two factors are quite positive for the company, and because they already paid the term loan, they prepaid the term loan, the company's profit margin has been increased to 18.92% in financial year 2020 compared with 13.96% in previous year. So they had a lower interest cost. I previously also discussed in profit and loss account itself. So these factors are quite positive for the company, guys. And let's see long-term debt to equity ratio. In March 2010 and so on, it has a debt to equity ratio of 1.65, which means that the company had more debt than their equity. So over years, it has reduced their debt to 0.4 debt to equity ratio in 2019. Quite positive. And last year, within 1 year, they don't have any debt to equity ratio, which means that company is virtually debt free. And interest coverage ratio also, it was very low in the beginning 2010 and so on. And see the interest coverage ratio minus 0.28 and 0.37 into when they had difficulties. So from there, their interest coverage ratio has gone up, and right now it stands at 26.48 in financial year 2020, which is very favorable for the company. Within risk, let's also see business risk. In previous videos, I was not discussing about any business risk, but I thought I should also improve business risk in financial risk as well. So the key business risk for them is the main product portfolio for them is two products. So any reduction in demand or drop in price will affect their whole business. And there is regulatory risk. Even if it affects its key product or other products, it will affect the company as such. And any debt related issues in future, it will have an issue. But given its reserves and surpluses, there is no much chance for it. And let's see the valuation of IUL Chemicals and Pharmaceuticals. And in this fund, you see price to book value and book value per share. So in this chart, you see these are book value of the company. The book value has been reduced in financial year 15, 16, 17, but later the book value has been enormously grown. And even the price to book value has been staying around 2.3, 2.96 right now. It is the highest, which means that stock is overpriced. But given the company's key competitive advantage and its position, its high EBITDA margin, still price to book value is okay. And regarding for investment purposes, the company has been improving book value over years, which is quite positive for investors who want to invest into it. Let's see price to earnings and price to book value valuations. See the price to earning ratio is at 7.6. I haven't seen any pharmaceutical company standing at 7.6. It's just because many pharmaceutical companies actually have good price to earnings. So it is low at 7.6. So guys, still you can invest into this share. But given its price to book value at 2.96, which means that it has 3 times the share price is 3 times its book value. But still, given the competitive advantage and other factors, it's still considerably okay. Let's see the SWOT analysis, peer analysis, and also see how the price of the share price patterns, and let's also give my insights on this share. So in terms of strength, in recent times it has a lot of strength. So it has consistently gained highest return stocks over 5 years in Nifty 500, a consistent share price growth, ROC, ROA, ROE, everything improving, and quarterly net profit YOY improving. Company is low debt, huge cash generating ability, annual profits improving, book value improving, zero promoter pledge, I told in previous slides, and FIAs and mutual funds increase in shareholding. So quite number of positive points for in terms of strength for IUL Chemicals and Pharmaceuticals. Let's see its weakness. So even though it has a lot of positive points, it is one of the bearish stocks. So keep in mind, still, even though it has a lot of positive advantages, still I don't know why investor doesn't like much. And in quarter there is a decline in profit, and decline in 2 quarters there was a slight dip in profits, but understandable, guys. So in terms of opportunity, So TTMP ratio less than 3 years. So companies having high ROCEP, affordable stock, and a low PE, and these are the opportunity, guys. Threads, there is a degrowth in revenue profits quarter. I mean, from the previous quarters, there's been slight decrease in the revenue and profits, which is, which might be cyclical business issues. And there is a trend in non-core income. Let's see I'm comparing with Toronto Pharma. See the difference in P. It stands even the market capitalization is around 3 times. I'm comparing with Toronto Pharma because let's see quarter profits. IOL Chemicals had around 17 crores profit, and Toronto Pharma has around 18 crore profit. But if you see sales quarter, it has near to 2000 crores sales revenue, and but at the same time IOL Chemicals has sales of 530 crores. So with this respect, I still think IOL Chemicals is better than Toronto Pharma. But Toronto Pharma is one of the Toronto Pharma and Davis Laboratories is one of the key companies in pharmaceutical sector, where companies has the highest EBITDA margins. So keep it in mind. And other companies, these are mostly large cap companies. Let's see the price chart. See, in 2014 it was having only price of 21 rupees. Right now in 2020 it went up to 842 rupees. So over years there has been a steady improvement in growth. And I think in 2014 there has been slight dip when they had credit issues, and a lot of profits has been going for interest payments. But later, as soon as they cleared debt and so on, the company's share has been performing very well. So last my insight, the current market price of IOL Chemicals stands at 634 rupees, and it is sorry guys, there is a correction. It has a very low P value at 7.6, which is quite positive when compared with 22.9, and overvalued PB. But still, I think that the stock is still fairly valued, given it has cleared its debt, the term loan, the competitive advantage, their diversification. They also diversified. A lot of factors are going positive for the company. So it's a good company with a good management, good use of integration, backward and forward integration, high EBITDA margins in pharmaceutical industry. So investors can still buy the share, as the perspective of the companies has improved a lot from previous years. So as a disclaimer purpose, I hold some shares of IOL Chemicals. I recently purchased it because I find it attractive, and that doesn't mean that you had to buy it. Make your own decision before you're purchasing or selling the shares. And the main risk I have previously also discussed, concentration of revenue to only to 2 products, and regulatory hurdles that might come in future. These are only 2 key risks related to IOL Chemicals and pharmaceutical. So last disclaimer, I'm not a appropriately licensed portfolio manager. Yes, you are bound to make your own decisions and uh, make your own investments. Thank you. And last, give me feedback about the video that I makes. Thank you.